there is a key level of support that is about to surrender in the next fortnight, in my view. Forget the fact that silver got slammed on the open today and all of that. This is churn and chop for the moment. That's that green candle that's rallying there. We have said for an extended period, this broadening pattern that you see here that I've just made there, like that triangle on that bear pole, that's the slap in the face that I'm highlighting, resolves with a break in most instances of this lower line. So I can introduce another color just so that everyone's clear on that. That is going to break. You also have a support level across here. That's very key.
Francis Hunt is the founder of the market sniper and originator of the Hunt Volatility Funnel, HVF, method, a trading methodology that focuses on identifying key breakout trading opportunities and key trading levels for various assets, including precious metals. The renowned technical analyst recently joined the Commodity Culture YouTube channel for an interview during which he shares an in-depth technical analysis of the precious metals market. During the discussion, Hunt shares his outlook on the price trajectory of gold and silver in 2023 and subsequent years. He examines gold's initial breakout at the $1,000 mark and how similar it is to what's happening currently. According to Hunt, the breakout above the $1,000 mark did not happen overnight. In fact, it took no less than 3 major attempts, then an impressive breakout that took the precious metals price right on the edge of the $2,000 mark and never back below $1,000. The technical analyst explains that we have now had 3 major attempts to break out of the $2,000 level and head right for the $3,000 mark. As it happened with the $1,000 mark breakout, Hunt believes the next major move will push gold prices very close to the $3,000 mark. But what Hunt is really looking forward to and closely following is what he describes as an imminent break in 2 key support levels on the gold and silver ratio chart. The chart shows the proportional relationship between the respective spot prices of gold and silver. Simply put, the ratio identifies how many ounces of silver can be bought with 1 ounce of gold. Being the world's favorite precious metal, gold has always been more expensive than silver. But the gold versus silver ratio is not fixed. It changes regularly depending on the current spot price of both metals. According to Hunt, the gold-silver ratio can tell us a lot about the price trajectories of both precious metals in the short and long term. Hunt estimates that the ratio, which is currently just above 82, will drop to 65 as gold makes its way to $3,000. From 65, Hunt predicts the ratio will continue to drop lower until it hits sub-30s and eventually single-digit. And he says all these will be put into motion in exactly 2 weeks. We will now bring you clips from the interview. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other videos on gold, silver, and other precious metals. You can also drop your comments and observations in the appropriate section below. It helps with the YouTube algorithm so we can continue to bring you these videos. Thanks and enjoy.
March 2020 was a seminal turning event for a number of markets. So March 2020 was the lockdown events around the thing that may not be mentioned, but that was peak bonds. That was highest valuation in debt. You actually had a 0.3 rate. In other places, you had negative rates. Debt was never more valuable. Everyone panicked. There was fear, and you ran into your government as being the bastion of last resort and the safest place for your money. And that was why rates went so low. And at the same time, you had a gold versus silver ratio super spike. That was the exact opposite of that. You got peak devaluation of silver in terms of gold, which was both a hit on gold, but a far larger hit on silver, which is a much thinner market and easy to bully. And you had about 128 ounces. We've never been that high before. Just to be clear, in a mining context, if you speak to Steve Newmeyer or First Majestic or any of these other people that are involved in digging holes in the ground, they will tell you that generally they pull out about 8 ounces. Between 6 and 8 is the range for every ounce of gold they pull out. In fact, silver is so non-economic. If you don't have rich enough vein, most silver is pulled out as a byproduct of digging in the ground for something else. Copper, gold, tin, and other things. So it's just a little bonus added extra to boost the bottom line. Probably works in as an important contributor, but they wouldn't do the mine for the silver. That's how low and disproportionately low the silver prices are. So that 128 was a peak blow-off. Technically, in technical analysis, you get blow-offs. and that was this period. That's how bull markets in anything, that's a chart going up, ends. You get a major blow off, and then you get what we call a slap in the face to the downside, and that brought you right down to a 65 neckline 65 there, which is a left shoulder. I'm showing you the left shoulder. This is a huge blow off head, and then we're in a right shoulder here. So that's a head and shoulder reversal pattern on the gold silver ratio. And this 65 was peak gold. We got through the 2000 the first time, and silver had the Wall Street bets mini pump. I think it might have touched 30 for a second or two, and that was down here. Since then, they've tried to claw back some degree of control, but they will never get to this high again. And in fact, this is now the last dance. The right shoulder is the last weak attempt at a bull market. You'll see this large red dashed line here. The key message that I'm giving, especially to your precious metal fans, is there is a key level of support that is about to surrender in the next fortnight, in my view. Forget the fact that silver got slammed on the open today and all of that. This is churn and chop for the moment. That's that green candle that's rallying there. We have said for an extended period, this broadening pattern that you see here that I've just made there, like that triangle on that bear pole, that's the slap in the face that I'm highlighting, resolves with a break in most instances of this lower line. So I can introduce another color just so that everyone's clear on that. That is going to break. You also have a support level across here. That's very key. So we are now leaning up against this.
The gold versus silver ratio is most useful at its extremes. Historically, when the ratio goes over 80%, it signifies that silver is very inexpensive compared to gold, and a huge rally is imminent for the more volatile precious metals. In the last 3 times this happened, silver went on to rally 40%, 300%, and 400% respectively. According to Hunt, this time the rally will be bigger than in previous cycles. The HVF model originator is predicting a 700% increase in silver from current prices to over $90 per ounce. Here's a more detailed analysis and the time frame for his predictions.
Right shoulder now, I'll leave the 2 week and make it a little bit smaller time frame so that we can get a bit more detail there. Let's go to the 2-day, for example. We are leaning up against that level right now, and we have thrown it down. The momentum that we threw it down here, and absolutely here, you are grinding along this range. The break of this level, which will say goodbye to the 80 relationship of gold silver, will have a disorderly decline. That means super fast. Generally, more so than you've seen here. A lot of chop, a lot of up, a lot of down to the 65 zone. And that'll be associated with not gold going up, but silver also within that going up relatively to an increasing gold. That will bring it to the 65 neckline. And when that eventually breaks, you will probably have a pause and a bit of churn period at the 65 level. You will then be let go all the way down to the 30s. So just to put that in context, what does that mean in gold silver price terms? We have a target of 2,900 on gold, and that's where it will probably rest again, 2,900, and I will show you how we got that. So technically, give you a little bit of the technical analysis. That comes from a macro bull flag target that we have that will take us to the threshold of 3,000. Incidentally, just as a small point, and I give this for all precious metals people, when we overcame 1,000, we also had 3 touches and then we smashed it on the 4th. And then we never looked back below 1,000. So in the lows of the 2009 era, we were sitting in a period where we tapped up against the $1,000 mark a number of times. This was as QE was being unleashed. You can see it here. That is your 1,000 mark. You put a finger over the 1,000, you touched it one more time, you touched it there, you touched it there, and then the 4th time you smashed it and you went right the way up to 1927, which brings you to the threshold of the 2,000 mark. Now you are here at the 2,000 once. That was the run-up, the bull market with the next level of QE, which went from hundreds of billions to trillions, 6 or 7 trillions, right the way up to you made your 3rd knock, and we feel you're about to go upside. I've got a lot of lines on there. So I'll just take them off for a second. And this flag that you can see here, that line there is projecting an up move to the 3,000 mark. So let me just take that off. There you go. And zoom it in a little bit for you because we've got a lot of history in there. That'll run you up to just about the 3,000 mark. So if you think 3,000, and when we make the head and shoulder target, I'm giving you a lot of detail here, maybe it's too much, but for that gold silver ratio, if you make that 30 down to the 33s level that the target is implied on that head and shoulders, you're going to have essentially 3,000 gold. And if you pause, normally when you make a target, you pause. So you would come down hard down here. You might churn a little bit at 65, and then you go again for a big sell-off and make the 33s target. You're talking about a much better ratio. It's still not 8, but it's 33. So what that would mean if gold is 3,000, you would divide by 100 and multiply by 3. It's quite simple. So you'd have 30 times 3, you'd have $90 silver by the time that target is made. So if they coincide, that's pretty interesting mass. And then we feel actually you'll go sub double digits. You'll go to a single digit in the gold silver ratio at a point. But I think we'll be in a very different environment in terms of debt and a very different environment in terms of the buying power of a dollar. But that will lead eventually to triple and even potentially 4 digits. You could have 10,000 gold and you could be at about 9.99, let's say, on the gold silver ratio, and you'll be at $1,000 silver. So we think silver has been constrained for a very long time, and that when it gets unleashed, it's going to be crypto-esque in terms of its response.
Hunt is predicting $10,000 for gold, single-digit gold versus silver ratio, and $1,000 silver. He's also predicting that the events that would set off this big break on the technical side will begin in exactly 2 weeks. But on the macro side, things might not progress as quickly. During the interview, Hunt cautions that inflation is completely entrenched in the system, as it is an important tool for central banks. They need it to continue growing government expenditures and devaluing their very massive debts. That's why they have to periodically leave inflation to climb very high, in the process devaluing the currency and their huge debts and reducing the purchasing power of the dollar and other fiat currencies. With the further devaluation of these currencies, Hunt sees more and more people investing in gold, silver, and other anti-fiat currency investments. It is during this period that he believes the big break will come for both precious metals. Please share your thoughts on Hunt's predictions for gold and silver in the comments section below. Also, ensure you smash the like button, subscribe for more exciting content on precious metals, and check out our other videos. Thanks for watching our videos.